Welcome everybody. Andy Hopkins is the Chief Executive of this company, and he and Steve Becker unfortunately are unable to be here this morning as they're doing a bank syndication meeting in relation to the Capital Smart presentation. So you guys have drawn the short straw and you have me to present. I'm the Deputy Chair of the company, and I joined the board of the business at the end of November 2018. And what I'd like to do is, we have some slides here which we'll quickly walk through, but put things initially in a bit of context. And as Alex pointed out, Thorney has been a long-term investor in the business, and the company grew rapidly through acquisitions over the course of the last 6 or 7 years. My getting involved in the business and Thorney's increased their investment through time has been associated with really transitioning the business from a rapidly growing micro cap to small cap company into an institutionally investable mid cap size company, which we anticipate will join the ASX 200 in the not too distant future. And just to put it in context what we actually do, the primary business is vehicle panel repairs, and obviously one of the questions people ask a lot is, well, what happens with the collision avoidance systems and things like that? And what we're fortunate about is the average age of the cars fleet in Australia is north of 10 years. There's a very small adoption of, let's say, new vehicles with high precision collision avoidance. And what we're actually seeing is the offsetting effect of the growth in the number of cars on the road by a reduction of the actual number of collisions per car. And net, we're finding that basically the vehicle accident incidence rate's about the same. From an automotive components and accessories, the business historically, going back in time, had this as a starting point with the ACAD business. And through time, as the acquisitions and the consolidation opportunity became greater and greater within the repair business, it's overwhelmed the ACAD side of the family. But this too is a very interesting sector, and one which is also highly fragmented, and one I think you'll see over the next couple of years continued growth on our part, both organically and through acquisition. And the third leg of the business is the procurement distribution side of things. One of the things that is quite impressive about our panel business in particular has been the effort of the management team to direct source a lot of the inputs that have gone into their business. And one thing that came out of a process where the management deeply engaged with Blackstone around a potential sale of a portion of the business about 2 years ago now, was we were able to do some very significant cost comparison work with the costs of one of their other portfolio companies, a business called Service King, which is one of the 3 largest panel repair operators in the United States. And effectively on a price like-for-like basis, the panel business of AMA was purchasing most of its inputs on the consumable side, which constitute about 1.5% of the revenues of the business, at about 55 to 60% discounts to where Service King were purchasing like items. And we've continued, as we've got larger and larger, to continue to drive down those costs into the business. The company in 2019 and at the end of October really had a milestone moment where we were able to acquire Capital Smart from Suncorp. This was a very important strategic acquisition for the business. Suncorp had developed this internal capability for panel repair to the point where it's doing roughly about $350 million of revenues a year, but came to the strategic decision that unless they were willing and able to start taking on third-party or other insurers' cars, it was time for them to move out of that business. For AMA, it's a very strategic acquisition. It enables us to really entrench our relationship with Suncorp. We already did nearly $100 million a year of repairs with them. Suncorp is the number 2 in the marketplace in auto insurance in Australia. And between Capital Smart and our existing operations, we do about $450 million of repairs with Suncorp. We estimate that they have a repair wallet, for want of a better expression, of $1.2 billion. And we think as a result of this acquisition, we are very well positioned to continue to take share of that wallet going forward. Along with Capital Smart came a business called ACM. ACM, we have made the decision strategically to combine with our procurement, distribution and the automotive components and accessories business. ACM is really what people mentally would picture as an old school chop shop. It literally takes the wrecks from all of the insurers and recycles the parts and makes them available for reuse in repairs. That we think will become a growing business, but importantly it gives us the infrastructure to push more directly into the parts supply business in Australia. And parts after labour are the largest part of the costs of a repair operation. And it's probably the last frontier for us in terms of really driving down the operating costs of the business. The journey's been a long one. We've touched on this a little bit. From our perspective, we've joined the party late in that sort of snaky sort of journey along there. Really one of the things that we were brought in to help do was really work on the institutionalisation of the governance side of the business. And over the last 12 months, you will have seen this transition really take place. There's been a change in the chairman's role. Ray Malone, who was really the driving force of the growth of the business over the last 5 to 6 years, stepped out and is off the board. We've had a number of changes to the board. Anthony Day, who had previously been the CEO of Suncorp's insurance business, joined the board and after a 7-month initial period transitioned into the role of chair. That wasn't by accident. The Suncorp transaction was flagged, and Anthony, because of his relationships with Suncorp, was able to provide them with the comfort of entering into a 25-year agreement with AMA in relation to the supply of their largest cost, which is their actual repairs. We've added a recently announced director, Nicole Cook. Nicole comes out of the HR world and has a very strong technology background, and prior to joining AMA ran a large area for the New South Wales government called Jobs for New South Wales. The background to that and why we think she's a very unique hire for us is that with the acquisition of Capital Smart, we now employ over 4,000 people from an organisation, if you go back 3 to 4 years ago, probably had 300 to 400 people. Importantly, most of our employees start life with us as apprentices. And again, the process of training, educating, and really then ultimately retaining and continuing to develop these people is a key part of the business. And it's something which we felt around the board table we lacked those skills, and we're very happy to have Nicole join. Importantly, we've formalised the management structure where Andy Hopkins has become the group CEO. Steve Becker has joined the business as the CFO. Steve will be known to a number of you in his role as CFO of Mantra, where he was CFO when the company went public and stayed for the vast majority of the journey through to its acquisition in the end. And the last step of all the changes in terms of institutionalisation has been the change of the auditors, where again we literally, Shine Wing had been the auditor of the company for its life. We got to the point where we'd really outgrown them, both from their perspective and our perspective size-wise. Post the acquisition of Capital Smart, we're now running at over $1 billion of revenue in 200 sites all around the country and New Zealand, and we felt that it was time to change the auditors to a Big Four accounting firm. And so KPMG, pending approval at their AGM this afternoon, will take on that role. So that combined with the acquisition of Capital Smart, we'd say we've had a pretty busy 12 months. But it's going according to plan, and we're very excited by where we sit today. Over the FY19 year as financial results, again, the company's made good progress through time. The one thing that would stand out from those sort of statistics, obviously, is the margin is a little bit tighter. The profit growth at the EBITDA level hasn't managed to keep up with the revenue growth. This is something which is front and centre in the minds of management and the board, and we're working hard on making sure that we get the operating leverage through the business as we continue to grow. Just as a trend for people to sort of understand a little bit of what's behind that. One of the interesting aspects of the vehicles that are getting repaired today are that the mix between the proportion of a repair cost which relates to parts versus the labour component of the job is changing, and that in the old days when you ran into another car or another car ran into you, in particular, just take for example a bumper bar, in the old days that was just aluminium and rubber. You run into them today and there's cameras and there's sensors and there's all sorts of things there. The margin that we currently make on parts at a gross margin level is a lower margin percentage than the margin you make on labour. And so as you substitute, as the proportion of the job that's made up of parts goes up relative to the labour on each job, our margins will be impacted negatively. And that's a good sort of backdrop to why we think the parts business is an important one for us to push into and really to make some significant progress with in relation to getting our costs down, and up with that ultimately our margins up. The guys again have had a very impressive history of performance through the last 5 years, and these statistics sort of play out. Now, importantly, post the acquisition of Capital Smart, with the benefit of the combination benefits, which we think publicly we've said we're planning on having $17 million of combination benefits, 14 really just purely related to the paint cost benefits of adding our acquisition and our deal that we have with paint and laying that over the Suncorp volumes, and 3 related to scale benefits. Combine that along with the earnings that come with Capital Smart and our own growth, and again FY20 we anticipate being a very solid year, and we've guided at the time of the announcement of the results that we'd be experiencing pro forma for the acquisition and the synergies double-digit EPS growth in FY21. Capital Smart and ACM Parts, again we've touched on this a little bit. The 25-year strategic service agreement with Capital Smart is a key aspect of this transaction. As the number 2 player in the industry, in an industry which the number 1 and number 2 have roughly about 60% of the market, becoming the primary and go-to or preferred repairer of choice for Suncorp is a very important market position. And we anticipate that because of the closeness of that relationship, there will be significant opportunities to grow our share of wallet there. Where we're now sort of having had the keys for just over 2.5 weeks, we're deeply into the integration phase. The company's appointed a chief integration officer and separate integration teams, and the goal here is to try and not miss a beat as we bring the organisations together. One of the things that we did when we made the acquisition of Capital Smart was give Suncorp the undertaking that for the vast majority of the sites we acquired, we're actually going to keep them as dedicated to Suncorp only vehicles. And we feel that, let's say, binding them to us and making sure that they feel that they still have a special relationship with us as the repairer will go a long way to again reinforcing our claim to a greater share of their wallet going forward. In relation to this transaction, we funded the deal with an equity raising. We raised about $220 million of equity. That was a mix of a placement and a rights offering. It was very well received by the marketplace and very significantly oversubscribed. We've done a new deal with our bank. In that case, the NAB and the ANZ jointly underwrote a $375 million credit facility, and which refinanced all our existing debt plus our new facility and allows us to continue acquiring businesses, which is important. And then working capital is code word for our paint supplier, who provided us with an increased market incentive that the company has used historically very effectively to fund its acquisitions and roll-up. What Smart brings to the group, we've touched on this, but importantly, it really does cement our relationships with Suncorp. IAG is the other large insurer. We have a very strong market position with them, and prior to this transaction, IAG was about 40% of our business. That's become a much more level relationship, and that our market share and position is now slightly heavier with the Suncorp insurance group, but generally speaking, we're now in a much more balanced exposure. We're talking a very large number of vehicles, 180,000. The team at Suncorp's Capital Smart business are a very good team. Our goal is to keep them operating the business separately and, importantly, giving us greater bench strength. We have pinched one of their senior staff and made her the group HR director. If anything, I would say that because they came out of a larger organisation, their HR style functions, reporting and general stage of development on that side of their business was much more sophisticated, and it really reflected where we needed to go, and we felt it also sent a very good message that we were looking for a best of breed integration approach to the business. Sorry. Going forward, we're in a good position. I think the only thing I would say is that the challenge for us is to continue growing. We'll continue doing acquisitions. They'll be specialist focused, and as we go forward, Andy Hopkins will be making himself more visible, and Steve Becker also. But thank you for having me today, and I'll leave you in peace. Sorry.
Thanks very much, Simon.